What's up YouTube? My name is Aditya and welcome back to our channel, The Indian Algo. And in this video, we'll be discussing about the demand and supply zones that actually work. So in the previous videos, we have studied the basics where we have mentioned about how a rally-based rally is formed and how drop-based drop is formed and all of those stuff. But in this video, we'll try to understand that when those demand and supply zones fail, then which ones actually work. Okay, so the number one thing that we need to follow is to understand that higher time frame is the best to take any trades. Doesn't matter if you're trading intraday, swing trades, or investment, you're making investment decisions. You need to make sure that you are taking trades on the basis of daily 4 hour and 1 hour time frame. All right, so let's say I'm taking a trade on daily time frame. Let's say this is a demand zone on daily time frame. Okay, this is where there was a big accumulation, there was some week of accumulation around here, there was a spring action, all of that stuff. Now what happens here is, let's say the price moves higher and there is a 5 minute supply zone here, the price falls here, there's a 5 minute supply zone here as well. Now what happens when you are at an or at a demand right here on the daily time frame demand? At this point you're willing, and let's say you haven't looked at the daily time frame, so you exactly don't know what's happening on the chart. Now when the prices are here, you are willing to take a short position here. You are expecting the prices to go lower, and definitely it does push a little bit lower and then spikes back up. Now you are trying to figure out why is this happening, how did the price spike back up, and then you move on to a little higher time frame, maybe 1 hour, 4 hour, and then to the daily time frame, and then you mark some reasons that okay, this is the reason, that's why probably my trade failed, right? And I don't want you to keep doing that. So this is the reason we will be initiating trades only on the daily time frame, 4 hour and 1 hour time frame. So not to initiate the trade on 4 hour, 1 hour, but we need to analyze the charts on the basis of daily, 4 hour and 1 hour, and try to understand the structure, what is the structure saying, and then proceed further. So if you are not aware of demand and supply zones, I will share the link down in the description. Please go ahead and check it out, and definitely that's very helpful, and then come back to this video for a better understanding. So here in this video, let's try to understand the demand and supply zones that we'll be using. So what I need to understand is, every time there is a range, okay, every time there is a consolidation, there's something happening inside this consolidation. There's something that's occurring inside this consolidation. And whenever this consolidation breaks out, this is where there would be some sort of demand zone, right? There would be some sort of demand zone, the prices comes back here, and this is where you will be taking a trade. Now why this particular area only, right? Let's try to understand this. Okay, now there are few conditions. The conditions are is that this should be a week of accumulation. Okay, you should be able to identify it after it's broken. After it's broken, there should be some sort of consolidation here, and then it should be taken out, and then you have to trade when it comes back for a pullback around here, or maybe here, or somewhere in between. Okay, so we'll try to understand that in the coming few minutes. But you don't have to trade this breakout, you don't have to anticipate this breakout. What you need to anticipate is the pullback. You have to anticipate the pullback here, and then you have to anticipate some moves from here. All right, so what's happening here is, you need to look for the break, you need to identify the demand zone that breaks out of this consolidation. Okay, now try to understand this. This is where, what do we have? This is where we have a supply zone, this is where we have a demand zone, and then again some sort of supply zone here, and then probably some demand zone here. Now you would try to take trades at every supply and demand zone, and every supply and at every demand zone, resulting in big losses, because you don't really understand that this is where the prices are being accumulated. This is where the prices are being either accumulated or being distributed. So we need to wait for this. All right, now use the concepts that we have studied previously. There should be a rally previously. Okay, there should be a rally previously. Now it's obviously it's not necessary, but most of the time you will see this, that there is a rally, then there is a consolidation. So what do we call this consolidation? We call this consolidation as a base. We call this consolidation as a base, and then the price will follow higher then it will come back to this base. Now if you guys have watched the first video, you will be able to recall that this is where the price comes here and then pushes higher. So this becomes what? This is my rally, this is my base, and this is my rally once again, right? This is my, okay, sorry, this is the rally here, right? And this is the origin demand here. So when the price comes back here, this is my demand zone. This is the original demand zone that we need to look for and expect the prices to be pushed higher. Okay, so we can expect another rally. So what happens here is that a base on a smaller time frame, even if you look on the 5-minute time frame, a base will be a little consolidation of 2-3 candles and then the price falls down. So we consider this to be our supply zone, right? We consider this to be a supply zone. But I want you to focus here is on daily 4-hour and 1-hour consolidations. I need you to focus on daily 4-hour and 1-hour consolidation. So when we see this is gonna be my supply. This is gonna be my supply. All right. So if I go back down here, okay, before going to the charts, let's try to understand a little bit why this happens. So let's say this is an area of demand. Okay, let's say this is an area of demand. One second. But I'll have to reload this. Yes, so if you see this is gonna be an area of demand. But what's happening inside this range? Let's try to understand this. What's happening inside this range? This is where we see the prices pushing higher, the price comes back and creates a consolidation range, and this is where we are seeing the prices touching every demand, pushing higher. There's probably some supply, prices coming down, there's probably some supply here, price coming down, and doing this inside this range, right? This is what we have seen a lot of times, and then the price eventually breaks out and then comes back to this particular base and then pushes higher. Now why do we see this? What's actually happening? Why is that this particular demand zone will provide support to the prices? Let's say that there's some institution and they want to execute 50 lakh orders, right? They want to execute 50 lakh orders. Now what happens here is that let's say these guys, what they decide to do is they decide to accumulate. I mean, like, they have to accumulate, right? There won't be, let's say this is the price here is 100 rupees. 100 rupees. So now do you think that 50 lakh orders will be right here inside this at the level of 100 rupees? There will be sellers ready to sell their sell their quantities to these buyers? No, right? No, right? This is very less likely that you will see 50 lakh quantities getting executed at once. So what are they gonna do? And this number is not realistic. It could be even more, right? So what are they gonna do? They will try to figure out, or they'll try to create liquidity in the market. And to create liquidity in the market, they are trying to create a range so that their average price comes down to 100 rupees. So how will they bring their average price to 100 rupees? So let's say they push the prices lower. Now when they push the prices lower, there are sellers that are selling their quantities, right? They push the price here. Now let's say the price comes back again here. They're selling here as well. So when people are selling, they're selling to buyers, right? So that's how they are averaging their quantities, and then it will turn out to be, so let's say they buy 5 here, they buy 5 here, they buy 5 here, they buy 5 here, 5 here, 5 here, 5 here, 5 here, or whatever the number it should be, probably 10 times, right? So yep. Now once they average this out inside this range, it will be around 100 rupees, which is somewhere here. It could be up and down, but that's completely fine. Now just imagine if these institutions, they simply execute 50 lakh orders, the prices will go up like this. They cannot execute on limit orders, right? So they have to execute things on market orders. So 5 will get executed here, 1 here, probably 1 here, 1 here, 1 here, 1 here, 1 here, 1 here, and they will have a huge big green candle. So just understand their average price. Their average price is going to be somewhere here, right? And just look at this average price. So 100 was here, 100 was here. Now this is probably 110 and this is 120. So once the price reaches 120, then their average price is 110, and there's no surety of how they will get out of this trade because they have just bought it here. There are no sellers in the market present at present, right? So they cannot simply sell their orders and expect the prices to get executed and they can exit with profits. That's not possible, right? So this is what's happening here. Now once they accumulate the prices, now let's say they were only able to execute 30 lakh orders and the prices are pushed higher, and the price are pushed higher, the price moves up like this, and we need to look for the demand zone that breaks out of this consolidation. Price will come back here and they will try to buy at this origin, so at this demand zone once again, and they will try to execute their remaining orders. So let's say they executed only 30 lakh orders here. Now they are very likely going to execute the 20 lakh orders here. So how will they execute their 20 lakh orders? By creating liquidity, and they'll try to book their profits here as well, right? And probably then again re-enter the trades. Now just try to understand here this thing, that this is the demand zone that we are focusing on. But let's say this was the, I'm depicting the same demand zone here. The price pushed higher and there was this demand zone here, there was this demand zone here. Now tell me, which is a high probability way are you supposed to execute the trade, this or this? Where are the institutions actually buying? The institutions are buying from here and not from here. So if you're trying to execute your trades here, you will eventually see the prices breaking lower and then coming back to this demand zone and then being pushed higher. So this is, guys, the most important stuff that you need to understand before initiating any trade. So if I go to Tata Steel here and I need to look for structures, I need to understand structures. And guys, if you see this, there's this huge consolidation here, there's this huge consolidation, and this is the demand zone that breaks out of this range. But there's something wrong in this range that I'm not liking. It is these equal lows. Okay, so I don't want to look for this. Probably the prices will definitely like hunt below. Now if it does this, you will have another consolidation here, price will come back inside this range, and then I will probably take a long trade here. Okay, so these are the few things that you need to keep in mind. Now if you see here, this is what we have. This is the consolidation around this point. Okay, this is the consolidation around this point. It breaks where? This is where it breaks, right? So this is the supply zone that I will mark, and just see how nicely the price comes here. This is where you need to understand that, okay, I need to start looking for short trades. What's going to be your target? Probably this liquidity or the next demand zone. Okay, or the next demand zone. This is what you need to follow on your charts. Now when you're looking here, look at this. This is a smaller consolidation which may fail very easily, so you don't want to get yourself involved in this. And if you see, this is not a consolidation, this is just probably a pattern or something like that. So you need to wait for the prices to create a consolidation, play inside this range and do something as such. All right, so the next consolidation that you can consider is this zone. And whenever the prices are around this point, you can start looking for a short trade. If the markets are also bearish, you can start looking for a short trade, and then you can target these equal lows around this point. All right, so if I go back here, let's come here. Okay, so we do have some consolidation here. Okay, so this is where the price breaks out of this zone. This is where the price breaks out of this zone. This is the base here. There was some consolidating candles, price reacted well. Price did went below this, but understand, unless and until this is not broken, it's completely fine. You can execute your trades once again when the price comes back to this demand zone. Okay, once the price comes back to this demand zone, you can execute your trades once again, because what's happening here is anything below this demand zone becomes deeply discounted unless and until it's not broken below like this. Okay, unless and until it's not broken below, it's completely fine, because institutions, they hedge their positions. They don't simply buy and sell at every demand and supply zone. They hedge their positions. So there needs to be an understanding that not every demand and supply zone will be respected, but these demand and supply zones have a very high probability of being respected. And even if the price goes below, it's not a short opportunity, it's eventually a better long opportunity when the price comes back here. Okay, now let's have a look here. This is the consolidation. This is where the price breaks out, and if you see, the price respected this base very well. It was pushed higher. Now you need to understand that you are going to be using the market structure along with this. You have to use the market structure along with this. There's another supply zone here. Okay, so this is where the prices were pushing the prices down here, eventually went up, couldn't sustain, created another base, comes back, tests and falls lower. So something like this, right? Something like this. But if I go to some other chart, let's go to 50 and let's have a look at next. Any other chart is completely fine. All right, so okay, let's look at Reliance, because there was a very nice demand zone on daily time frame or weekly time frame, I suppose. Yes, somewhere here. So if you see this consolidation, this huge consolidation around this point, and where did the price eventually broke out of this demand zone? If you see, this is a small base, there's a little base here, right? And then there was a breakout, the price comes here, and just look at the move this gives out, right? Definitely this is very bullish. Reliance is very bullish. I really want it to come back down once again and then probably take a long trade. But yeah, whatever it is, this is what you need to understand here. Now if you see here, there was another base, another consolidation. I'll remove this. There was another consolidation around this point, right? This was the base, the price comes back to this base and then spikes up. Okay, so we have to be looking for these bases and these origin demands and then initiate trades. Now you can use the same concepts of on lower time frame, but they will not work out unless and until you do not have a proper understanding of your market structure. It's very important. If you have a proper understanding of your market structure, only then you will be able to initiate good trades. But see, this is something that you need to avoid, and this is something that you need to be taking trades on. All right, so this is it, guys. I hope you like the video, and I'll be coming with more parts with this, and I'll try to make you understand how you can take much better trades with these demand and supply zones. If you have any queries, you can let me know in the comment section, and there's a lot of links down in the description. Please do visit it, and we have a Telegram channel as well. You can join the Telegram channel, and yes, make sure to like the video, share the video and subscribe to our channel. Thank you so much.